Hi, this is Michael Kramer of Mott Capital. Today is Tuesday, November 11th, and it's around 4:30 p.m. New York time. So again, the government shutdown continues here in the U.S., although there is sign that it will be ending, hopefully by the end of this week. That should mean that we should begin to start seeing economic data flowing by sometime in the middle of next week, and it's going to have to be something that you'll have to keep your eyes out for. Outside of that, there is no scheduled data this week that will be of any significance. There will be a 10-year Treasury auction on the afternoon of November 12th, and there will be a 30-year Treasury auction on the afternoon of November 13th. Other than that, we were supposed to get CPI and PPI this week, but of course that won't be happening, and we'll just have to wait until next week to start getting some economic data again here in the U.S. In the meantime, we've seen the euro rebound the last couple of trading sessions, rising back to the trend line here at 115.90. The big question, of course, will be whether or not the euro can actually break out of this trading range and begin to strengthen, pushing back towards 116.60 or not. The problem is that the 20-day moving average has been serving as resistance for the euro on the past couple of occasions. You can see that was the case in this area here, that was the case here and here. So this will be the fourth time now that the euro is challenging the 20-day moving average, and we'll find out for the fourth time whether or not this serves as a resistance area, which could really potentially push the euro back to the lower end of the trading range at 114.80. It is important to note that the RSI has been trending lower, and we are getting to a point where it looks like the RSI might even be challenging a potential breakout. And so if we do see the RSI, let's say, break beyond this area here at 50 and begin to push towards 60, that would be an indication that the trend in euro is changing. But until we can do that and pass the 20-day moving average, the trend probably remains lower on the euro, and we're more likely to retest the 114.70 region than we are to rise to the 116.60 region. When we look at the pound, it's a similar situation. Momentum has clearly declined. RSI is clearly telling us after reaching oversold levels, we got a little bit of a short-term rebound, but the RSI, like I said, is still trending lower overall. 20-day moving average is at much higher levels, up at around 132.5. Right now, resistance is at 131.70. This has been a major area of resistance going back to May 12th, when it was acting as actually support. And so when support breaks, it then becomes resistance. And so we'll have to see if the pound can get back above 131.70. It looks like at this point, though, it may have a very tough time doing that. Obviously, there's a lot happening in Britain right now with the politics of the budget that's coming up on the 26th. So until we get maybe some of those issues cleared up, we may be looking at a situation where the pound either trade sideways to maybe lower in the coming weeks and potentially back down to this 130 area. I mean, obviously, upside looks like it's fairly limited here to around 132.5, at least based on where the 20-day moving average is. The yen is also continuing to weaken versus the dollar, kind of just hovering now around 154.5. It's been stuck there since the end of October. So it looks like we're probably getting to a point where we're likely to see the yen actually break out to the upside and really begin to weaken in a more material way. If we look at it a little bit more closely here, and you can draw a trend line in, it again looks as if there's some sort of ascending triangle pattern that's formed in the yen, and that likely means that we're likely to see the yen break out and push to weaker levels versus the dollar, and it could result in the yen actually weakening all the way back to 156, with the potential to go all the way back to 158.5. This 156 area looks like it's a fairly mild level of resistance, with the 158.30 area seemingly a bit of a stronger region. When we look at gold, it was able to rebound the last couple of days, but it hasn't really been able to clear the major levels of resistance that are needed. This area right in here around 140 or so was resistance for a couple of days back in mid-October, and you can see we're failing there again. The other thing with gold is that it continues to trade with implied volatility levels, and so oddly enough, it's almost as if when implied volatility in gold isn't rising, you're not really seeing gold go up. And it could really just be an indication that it's almost a situation where you just have pure speculation being the sole driver in gold prices at this point. It really is the only thing that kind of makes sense. So my guess would be is that if you're seeing implied volatility levels falling and gold prices rising, I would be kind of weary of that situation, potentially even signaling a false move. And if you're seeing implied volatility rising, it's almost as if it's serving as confirmation in any move higher you're seeing in gold. So I would just continue to pay attention to that. I think 4130 is a pretty important area. If we can break out above that, then there's really no resistance until about 4350 again. If you're not able to pass this level, then you could be setting up what's going to be a little bit of a further decline, probably undertaking the lows that are seen at 3900 and pushing back to 3786 or so. I mean, clearly the RSI has really indicated that the momentum has shifted. You can see that we've been kind of stuck around the 20-day moving average, really haven't been able to get meaningfully beyond it. So it's just, overall, it looks like this is a pretty important spot for gold in terms of determining which way the next sizable move is going to be. Brent prices have been able to stabilize in this 63.5 to 65 area. This is an important spot because if Brent can really get above 65.30, that could lead to that move to 68 to 69. I mean, the RSI is clearly trending higher at this point. We have seen lots of indications that momentum is trying to shift with an RSI that's been generally trending higher, whether you go from here to here or from here to here. I mean, it looks like we're also getting to a point where the RSI could also be breaking out from a momentum standpoint as well. If it can just clear 57, that would serve as confirmation for any breakout above 65 in Brent, which could really push it back into this $69 range. At least that's where resistance has been. And until we get back to 69, there's really not much else to talk about in this situation. When we look at the DAX, I mean, sure enough, last week we got the move lower, back towards the lower end of the trading channel. That's been basically a horizontal channel now for several months, going all the way back to this period in mid-May. So right now, it's not surprising, I guess, to see that the DAX is now moving back up towards the upper end of the channel, which the next area of resistance will come again at 24,300 or so. I mean, when we look at the RSI, there's really not much to say here. It has obviously been trending lower. At the same time, we tried to break out on the RSI and that failed. We tried to break out on the price for 4 different occasions and that failed. And it looks like you can make an argument that there's some sort of trend line right in here that extends from the peak on October 9th to the close on November 11th. And if you draw the line, it kind of suggests that there is a trend line here. And so it will be interesting to see whether or not the DAX can break out and push back to 24.3, or if there's something else going on here that suggests the move up in the DAX is over, and this failure at 4 different occasions around the same level is really serving more as a distributive top, which is a signal that the DAX is due to break this lower bound. At the same point, I mean, the DAX has held support on 4 different occasions. So it's really a frustrating standpoint. It reminds me a little bit of the gold situation we were in the spring, and then finally over the summer gold broke out, and it could very well be that the DAX breaks out as well. But right now we don't have that information in hand. And there's a lot to be proven on the bullish case for the DAX, because obviously it's been really struggling recently, and it's had plenty of opportunities to break out to the upside. And so I think at this point you have a couple of levels of resistance to serve as tests, and then of course the final level of resistance would come at 24.7. A failure at any of these points along the way likely is going to lead back to a retest of this lower bound, and that could really be all it needs to signal that there has been an official change in trend, and that we're likely to see a DAX pushing to lower levels and higher ones. The FTSE just continues to grind on, which is, it's a little bit surprising in some ways because we've seen, lots of different indications about a softening labor market in the UK. The BOE sounds like it's due to cut rates. We've obviously seen rates surge. We've seen the FX weaken, and it's almost maybe as if the FTSE has become sort of inflation hedge in a way. And that's possible. It certainly has been trading with the likes of things like copper and precious metals. We know that from past experience. Although if you notice more recently, copper has been diverging, trading lower, while the FTSE has been trading higher. And so you haven't had that commodity connection the last couple of weeks. Even when you look at the FTSE versus gold prices, it certainly has kind of departed a bit in this region, and now we're getting back to being in line with gold. So it's an interesting kind of situation in terms of what's the ultimate driver here. Certainly isn't oil prices. So again, it looks like right now when we look at the FTSE, we're getting towards the upper end of resistance again, and typically when we get RSIs above 70 and we get to the upper Bollinger Bands, that's an indication that we're going to slow down for a while and maybe consolidate sideways back towards this 20-day moving average. So it's very possible that we're looking at a scenario where the FTSE just trades sideways for the next couple of days, maybe even the next week or two, very similar to what we saw during this period of time and in this period of time. And that could be what we're looking at for the FTSE for the foreseeable future, or perhaps just a flat-out decline back to the 20-day moving average, which would then allow it to maybe move higher a little bit sooner. But clearly a very different picture between the FTSE and from the DAX. When we look at the NASDAQ, we've certainly come back down to the 20-day moving average as we kind of expected. We actually, as noted previously, came back down towards the lower end of the Bollinger Band even. And so now we're trading right around the 20-day moving average on the NASDAQ. You can clearly see that the momentum indicators are still pretty bearish on the NASDAQ, and we haven't really been able to break away from the 20-day moving average. The 10-day exponential moving average, we've also been consolidating around now for a couple of days, and we saw the same thing really happen back in here. Obviously, next week we'll have Nvidia results, and that's going to have a major play in terms of where really the next directional move is on the NASDAQ. And Nvidia is certainly trading towards the very upper end of its range. So that is one thing that we have to be mindful of. Obviously, resistance is going to come somewhere around this old high in the upper Bollinger Band, which is going to currently be around 26.1 and maybe 26.3. Likewise, a break to the downside. Looks like we could potentially return to the lower band, maybe the lower end of this trading range around 24.2. But until we break 24.2 or break above 26.1, we're stuck in a trading range, and it's quite possible the market here in the US may just decide to just stall out and just trade sideways until we get to Nvidia's results next week. It's a similar look for the S&P. We have some resistance up here at 68.61. That's really more to do with some intraday price actions that we saw going back in time. You can see that this served as a support and resistance area back in early November. And so right now, again, we're kind of in a similar situation where we've managed to fill a gap. We haven't really done much of anything really since the end of October at this point, really just kind of consolidating sideways in a big trading range. Again, we have Nvidia's results coming up next week, and so that's going to play a big factor in things. The upper Bollinger Band also allows the S&P 500 to rise back to 69.10, maybe even as high as 69.30. Likewise, a break lower would be somewhere around 66.20 or so. Until we really break below the lows that were established on October 10th, it's hard to be too bearish on the S&P, and it's hard to be too bullish on the S&P until we break out to a new high. And again, with Nvidia, it's going to be tough, I think, for that to happen. The Dow isn't as reliant on Nvidia. Nvidia is in the Dow average, but remember, the Dow is a price weighted index, not a market cap weighted index. So the Dow just doesn't have the same, Nvidia just doesn't play the same role. And that's why a lot of times when you see the S&P doing well or the Nasdaq doing well and Nvidia is leading the charge, the Dow is kind of being left behind. And in this case, today was a really good example of that. But you can see for the most part, the Dow was also in a similar spot, testing the upper area here around 48,150. Meanwhile, it's got much further to go to the downside, potentially to 46,030 on the lower Bollinger Band. So again, it looks like you're probably more likely to test the upper end of the range in the short term than you are likely to test the lower end. And if one index is going to go against what the S&P and the Nasdaq do, it will be the Dow, because again, the Dow isn't as dependent on Nvidia as some of the other as the S&P and the Nasdaq are. Anyway, I hope you have a great rest of your week, and we'll see you next. Bye.